All right, welcome to the market of the moment for the week of July 4th, 2022.
In mortgage rates. So last week we actually, we got a little bit of a reprieve from the high rates that we had previously seen, right? So rates came down I say a decent amount, because we were in the, I'd say as of like 2 weeks ago, rates had crept up into the 6.25 to almost 6.5 range, and then this past week we dropped down to the 5.25 to 5.5 range, and then yesterday happened, right? Yesterday happened. There's still a lot of it's amazing to see the impact or the ongoing impact of inflation in the markets, right? In the stock market, in the bond market. So so thankfully we didn't give up all of the gains that we received last week, but we gave up about half, and we'll talk about that in a second. But so current mortgage rates are in the 5.5 range to about 5.8 on a 30-year conventional, and gosh, it is so hard to predict what's going to happen. Some of the sources that I follow, we're expecting rates to continue to tick higher for the next 2 to 3 months, right? Is what we're now hearing. And then and that is coming on the heels of the fact that we may already be in recession, right? Or pretty close to a recession, right? And there's a lot of different things that we've talked about. One of the key indicators is two back-to-back quarters of negative GDP, right? The gross domestic product numbers that come out. So the second quarter numbers aren't out yet, of course. So that's that's causing a pause there. But again, if we're already in a recession, or we'll be going into one shortly, there's some speculation that rates may be coming back down a little bit towards the end of the year, which is somewhat contrary to what we were hearing previously, where we were going to be up over 7% by the end of the year. That seems like it may happen in the next 2 to 3 months. We may get not to 7, maybe the mid 6s again, 6.75, something like that, and then we'll see them kind of taper back down. But it is we got to keep our heads on a swivel over here, because it's moving really fast. But again, what we're advising right now is I'm doing a lot of 60-day rate locks. We have a program where we can lock your rate now without having a property under contract yet, for 30, 60, 90 days, and really anywhere in between. So 30, 45, 60, 75, 90. So there's just some good opportunity to lock in numbers now, instead of waiting. Because again, if rates go up to 6.5% in 3 months, well, there's a good bet that you're probably already locked in at 5.75 or something like that. So it is the importance of following this on a weekly basis, is because there's just from one week to the next, there's just so much volatility. So going to the charts here, we're looking at the mortgage-backed securities charts. We're looking at that July 5th date, and there was, again, we're talking about the volatility in the market. It was still on July 5th, we closed up. So if we look at the last, essentially that green box there, we still closed in the green, which is positive, right? Green is good, red is bad. But yeah, essentially yesterday, so that next day, which is July 6th, again, we started the day off at I think pushing over 101, and then ended slightly over 100. So that was just a huge drop in mortgage-backed securities, which again sent rates up, 1/4 to 3/8% yesterday. We actually had 3 rate changes yesterday, in a single day. So again, there's the interesting part here is anytime you see big upticks or downticks like this, we're always looking at the next that next line, right? Which we saw the mortgage-backed securities were pushing down on that 25-day moving average, right? That kind of copper line, I guess, that we're seeing going on that downward trend. So they hit the 25-day moving average, or got pretty close to it, felt, got some resistance, and then bumped back up. So thankfully, they didn't get below below the 25-day moving average. If they do, and they're again, we may see that it gets below that. There's a lot of room, like almost 100 basis points to the downside, which could mean another 3/8 to 0.5% increase in interest rates.
Wow.
So the importance of working with somebody, of talking with somebody that monitors this on a daily basis, right? Because this is a daily, and 5 times a day, 6 times a day, like we're doing now, just to make sure there's no significant changes. As of right now, we're down 11 basis points. So we're sitting just a little bit over 100. We're still at about 100.25, which is pretty close to what I think it ended at yesterday. So, so we can say that it's relatively, at this point, it's relatively flat, right? So we're not going to see any upticks or downticks. But at this point, the market's almost closed. So there shouldn't be, too much of a change. Tomorrow, we're getting the JOLTS numbers, the job openings and labor turnover numbers. So it's, those are obviously jobless claims, which is unemployment, right? That has an impact in market. So we're waiting for those numbers to come out tomorrow. BLS jobs report. So there's just several things that are on the horizon that could impact mortgage rates, right? And for everyone that has money in their 401k, we're not looking at it right now. It's pretty ugly. Interesting. Yeah, pretty ugly right now. But again, such is the market. So,
well, with rates going up, and we talked about housing appreciation and things of that nature. So a lot of people talk about, well, I'll just rent. So we wanted to take a minute to talk about what it looks like if you rent versus being a buyer. So let's take a look at this chart, and I'll let you talk about it.
Yeah. So, so in the past, when mortgage rates were at 3%, this on a monthly basis perspective, right, looked more attractive. So your monthly, what you're paying in rent versus what you're paying in a mortgage was pretty darn close. And now because rates are in the, this is, I think we're estimating here a 6% interest rate. The payment's higher, but again, we'll kind of just talk through this. So this is a $350,000 home purchase in the Collin County area versus obviously renting also in the Collin County area, right? So this is just picking average of rent costs here in the Collin County area. So if you're purchasing a home at $350,000, putting minimal amount down, your total payment, including property taxes, home insurance, mortgage insurance, all of that, all that stuff is in the probably $2,700 to $2,800 range. Now this includes about $145 of maintenance and repair, right? So just in the event that you have to have something done, but most likely your actual mortgage payment itself is somewhere in the $2,600 to $2,700 range at this $350,000 price point. Yeah. So given that same home size, you're renting, right? So that next box is your first year in rent, which is right around $2,000 plus your insurance costs, which is roughly $30. So there's about a $500 difference in just the mortgage payment compared to a rent payment for that first year. But again, as we know, with home values continuing to go up, obviously rent costs going up, where it starts to significantly pick up steam, and the difference is that first, we're talking about maybe a 9 or 10 year period where that your mortgage payment is staying pretty close to the same, right? It may go up a little bit because of property taxes or whatnot, but the standard annual rent increase is just shy of 4%. This past year we saw a 15% increase in rent, right? So this is just giving average numbers. The cash flow, talking about cash flow difference, is if you're renting, that's a negative $54,000 in just the difference in cash flow, right? And that comes from the appreciation gain that you're gaining with a home and appreciation versus the amortization gain. So that's where these numbers are coming from. So we touched on it a couple of weeks ago, just this idea of building wealth, right? And how you're able to do that. And this is really step number one, right? Now, again, if we're going through numbers and you're like, hey, 350 is out of my price range. Well, hey, let's look at what does 225 look like? What does 250 look like? You may have to purchase a little bit further out. But at the end of the day, you're still building wealth, right? You're building equity. Home values, like, like we've seen, are not, if priced appropriately, are not going down, right?
Yes.
I think a lot of the numbers that we're going to transition to here talk about downward numbers, but it's again, when you really put pen to paper, just the overall net gain in purchasing a home in overall wealth, right, is huge. So
yeah, well, we'll jump to this slide real quick and go ahead and talk about it. Might look at it again later, but it fits in here as well. So Chris is talking about appreciation over time. This is a forecast going out to 2026, and you see, averaging about a 4% gain, the next 4 to 5 years here in our Collin County, DFW area. I would expect those numbers to probably be more in the 6 to 7
right.
range, maybe even up to that 9.3% range for our area, but very conservatively, I'd say 6%. So even though as your home's appreciating and your payment is staying the same, that's not happening for those that are renting. That homeowners is appreciating, but you're going to be paying more. As Chris said, you don't get to keep the same payment when you're renting. It's going to go up versus being a buyer. So now is still a great time to buy. Tell all of our clients, if you can buy now, now's a good time.
Yeah, I think that's the biggest thing, again, is education, right? We're just wanting to educate consumers, buyers, whatever it is. Looking back to, homes or customers that went and put new construction homes under contract in 2020, right? In 2020, the housing market was crazier than it is now. Homes were taking longer to build. So we saw homes taking 12 to 18 months, right? From 2020 to now 2022, I mean, those homes have appreciated. A $500,000 home, if somebody got a home, if they locked in that price, right, in 2020, got a home under contract, is probably now is worth easily $750,000.
Yeah, definitely.
So that's again, that's the biggest thing, is we want to just, obviously be educating as well. Because if you don't know, you don't know, right? But obviously we're here to be a resource and make sure you know.
Definitely. Some of our biggest wins have been getting people under contract. Last year, some of them are just now getting ready to close, and they probably already got $50,000 to $70,000 worth of equity in a home as they move in. So, that's kind of how you would like for it to work.